Welcome back here with us on Urban Debate on Mirror Now, your destination to understand what is there in Budget 2022 for you. And today we are joined by JB Mohapatra, Chairperson, Central Board of Direct Taxes. Thank you very much, sir, for joining us here on Mirror Now. My first question to you is about the big announcement of income tax on virtual digital assets by the Finance Minister in the budget for the next financial year. What was the rationale behind it, and does it really mean that cryptos are legal in India?
Yeah, the reason as to why taxation on the virtual digital assets has been brought in this finance bill is that there have been evidences which some of the evidences which were unearthed by us over a period of time. In the last 5 years, we have worked very hard at investigating the sources of investment in the crypto trade and how the exchanges work across many jurisdictions in India. And we have come to a conclusion that this market, the virtual digital asset market, it needs to be tracked in a manner which will give revenue to the government, number one, and number two, to get an order and discipline in the functioning of the market. So before the national regulation on the crypto is put in place, the government thought that the income tax department should go early before the national regulation kicks in and try to find out and give inputs so that the national legislation on the crypto, it can be strengthened and it can be more efficient in that manner. So we have been working on the virtual digital assets for a long time, and we have not just the working knowledge, but we have some deeper insight into the functioning of the market and how the investors and their investments play out. And so we are reasonably confident that the task given to the department with regard to the virtual digital asset transactions through 115 BBH and the TDS provisions under 194S, we can do a good job of getting the much needed input and moreover the revenues, tax revenues coming out of those trades.
And when you say that national regulation on crypto is something we can look forward to, does it mean that it won't be banned for sure now?
Income tax department has never been mandated to be pronouncing on the legality of any transaction or any profession or any business. We are not the right authority to be questioning on the legality of any activity. Income tax kicks in when there is an incident for taxing a surplus or recognizing a deficit. So that said, income tax assessment or determination of tax under the new section 115 BBH, it does not lend any credence, any legitimacy, any sanctity in the eyes of the law as regards the legality of that transaction.
Can you elaborate a little bit, for our viewers, how will this tax on crypto really work? Which kind of assets are going to be covered in this?
Virtual digital asset is defined in section 247 capital A of the Income Tax Act, which is provided in the bill. 247 capital A is a new provision. It defines a virtual digital asset, meaning thereby a code or a formula or an information which is generated through cryptographic means and which is of which has got inherent value and which can be electronically stored, it can be traded, and it can be transmitted. The non-fungible tokens also partake the character of a crypto. So it's an all-inclusive definition. So if a transaction is made of these kind of assets, then the transactions would be liable to be taxed under section 115 BBH. 115 BBH is the taxing provision which says that any surplus will be determined by reducing from the sale consideration only the cost of acquisition. the surplus will be taxed at 30%. The losses, if any, it will be disallowed, that it will not be allowed to be set off against any other income from any other source. These are the main section. You have to go to 247 capital A to understand the definition of the virtual digital assets, have to go to 115 BBH to understand the taxing provisions at 30% of the surplus. Then you have to go to 194 capital S, which is the TDS provisions with regard to the transactions in the virtual digital asset. 194 S would say that at the time of payment for the transactions which have been made, one has to deduct 1% of TDS on the value of transaction, right? But the TDS provisions will not apply in few cases. In the case of specified person, it will not apply if the amount is not more than 50,000 in a year. In the case of non-specified persons, it will be rupees 10,000. Specified person also has been defined in section 194S, meaning thereby an individual or a HUF who is in business not having a turnover in excess in 1 crore, and if he is in profession, it should not be more than 50 lakh of rupees. So these people will not have to deduct TDS at 1% if the annual annual transactions will not exceed 50,000, right? So if it exceeds 50,000, they have to deduct the TDS at 1%. For the rest of the persons who are indulging in virtual asset transactions in the virtual digital assets, the amount, the ceiling for which the TDS sections will kick in will be 10,000 rupees per annum. So we have a TDS provision, we have a charging provision, and we have a definition. So this is the small but significant, three small but significant provisions controlling the whole gamut of affairs with regard to the digital virtual assets.
So, for example, if I have crypto assets and I'm making profit, so how do I pay the tax? Will it be part of income from other sources?
No. For that, once the legislation kicks in from 1/4/2022, provided it becomes an act with the assent of the president, then what happens is that this surplus, the profit what you are making out of these trades, it will be taxed under a special provision in Chapter 12. So the nature of these transactions is neither a business, nor an income from other sources, nor a capital gains. You will be taxed at a special rate of 30%, right? So it doesn't have a character of its own. It does not fall into any of the 5 sources of income which are defined in the Act. So this is a special provision meant to cater to the needs, the special needs of a sector.
But sir, do we have any data about the crypto world in India? How many investors are there? How is the department really going to monitor these transactions?
Right. The department has been working on inquiring into the various aspects of the crypto trade for a long time. Since 2017, for the last 5 years, we have been working through isolated, sporadic one-off or a bigger scale, special projects we have done. And what we have known now, there are 40 exchanges, big or small. Out of that 40 exchanges, crypto exchanges, there are 10 who are significant. The turnover in one of the bigger exchanges ranges up to 34,000 crores per annum. The annual turnover in these exchanges are also, again, this is not data driven, but this is anecdotal. What I said about the one big crypto exchange having a turnover of 34,000, this is backed by data. But with regard to the all exchanges, the turnover therein, it is not data driven, but this is not coming out of data, but out of various reports that the amount may go up to 100,000 crores. And again, we don't know because we don't have a pan-India mapping of the investors. But again, reports would say, unconfirmed reports would say that 10 crore people have made investment in crypto. So it's a very large market, It's a growing market. It's an interesting market. And this is a market where, even though the regulations are not on at this point in time, the department has been given the mandate to enter and see for itself the actual working of the market and give inputs for the formulation of the national regulation on crypto on a later date.
But sir, it's a flat 30% tax regardless of any short-term or long-term holding. Isn't it a bit high given the fact that around 90% of the investors are in the ticket size of 500 to 5,000 only?
I can say that the more than the 30% tax, what has bothered us is that when we had a look-see into the investors, we found people investing and not reporting, number one. And number two is that people investing, transacting, but not filing an income tax return. And people have invested through unaccounted sources. So these are various aspects of the crypto trade. And crypto trade has suffered because of the lack of transparency in its operations. And over a period of time, once the government departments enter into understanding its working, maybe the sector will stabilize and there will be more orderly development of the sector.
And what if the transactions are happening overseas, since these are digital assets? So how are you going to monitor those?
No, what we'll be targeting is, the investors in India, right? And if, there will be two ways in which, the crypto trade should be happening. It is maybe through the exchanges, number one. And here the exchange also is a very peculiar kind of, working of these exchanges here. Here, the exchange makes the market, it creates the market, it is a market, but here exchange also is a player in the market, it participates in trade. So it's a very different kind of, ecosystem where, this virtual digital asset trading is concerned. And what we are looking at is that individual transactions through the exchange that we are going to track through tracking the exchanges through the TDS route. And for the P2P transactions, without going through the exchange, that also we will find out a way in which we can track also the P2P transactions.
And what is P2P transactions, sir?
It is peer-to-peer transactions in which these are transactions between two participants, right? In which the exchange will not be involved.
Okay. Now, in the budget, it was announced that gifting of virtual assets will also be taxed. How will that work?
Exactly. So, what we have taken all efforts in order to tax the transactions which are sold or transacted or they're traded, right? Or transferred. But if somebody intends not to transact, but to gift it to somebody else as a property, right? So what we have done is to go back to a section, old section, section 56(2). So we have put an explanation over there. So we have put an insertion over there saying that virtual digital asset will be there, will be part of the property, part of the assets, meaning thereby, if you are gifting the virtual digital asset without consideration or without adequate consideration, if somebody is receiving that without consideration or without adequate consideration, then the taxing that part, which is not appropriate, will be done through section 56.
Is it in a way similar to how gains from gambling are taxed in India?
No, let's not mix up gambling or this one. We are not entering into interpreting this sector qua any other sector. This is a special sector for which a special regime and a special chapter has been enacted, and a special provision has been enacted in Chapter 12. So this is unlike anything else. So this is a sector in which the department has been given the onerous responsibility of entering and trying to figure out actually how the markets operate and how the investors behave in that market.
How much is the department really looking to earn from this particular 30% income tax, say in the the first year itself?
See, revenue generation coming out of this new provision 115 BBH is not the end goal, but it will be a function of administering this particular provision on a later date. So we don't have any exact estimation as to how much we will be making by way of taxes. But if it is regulated, then things would be much easier for us to predict on a future date. At this point in time, without a standardized, correct data set being made available, we cannot predict the outcome of all our efforts.
Sir, would it not have been wise to first decide whether the government wants to ban crypto or treat them as assets and then allowing your department to reach them?
No, this is a situation in which although the trading has been allowed, I believe that Supreme Court has ordered the banning of this crypto to be lifted and all those things. So crypto exchanges are running, everything is running. But what has been under deliberation for some time is the national regulation on crypto. So when the national deliberation on crypto comes in, the inputs from the tax department will be very essential. We would at that point in time have greater level of data, curated data, which will be supporting the formation of any policy around crypto.
Moving on, sir, why has there not been any change in the tax slabs this year? There were expectations that at least something will be done to give relief to the salaried class.
See, Heena, the year in which we are dealing with in this particular finance bill is the year which comes after a very bad year with a lot of degrowth and almost recession-like situation, right? So we are on the recovery path from a very bad phase in the history of India, and for that we need as much and as consistent a resource stream as the laws and the laws will provide. For that, instead of making cosmetic changes to the tax rates or tax surcharges, wherever required, the government has intervened for streamlining and right-sizing, and for rationalizing the surcharge. It has done for surcharge on capital gains. For cooperative sector, it has done its bit in rationalizing the alternate taxes regime for them, and it has done its bit in rationalizing the tax structure. But tinkering with the tax rate at this point in time was thought to be very unwise, looking at the uncertain nature of the future times.
Sir, NPS deduction for state government employees has been raised from 10% to 14%. Why not for private sector employees?
We will consider that point in due course of time.
It's come as a good news for many private sector employees watching you right now that you will be looking into this matter. A last question, income tax slabs have remained unchanged, but taxpayers can file returns in 2 years. What is the rationale behind this decision?
This is the realization on the part of the department that some taxpayer would have genuinely and inadvertently omitted to file his return of income for a particular year, and he could have inadvertently omitted to file the correct return. He might have escaped, some part of the income might have escaped his notice. So we have given him 2 more years to file the return, along with an additional tax of 25% and 50% for first year and the second year respectively. So there is a genuine realization on the part of the department that we should not be closing the doors of somebody who has genuinely omitted to file his return of income.
I said that will be my last question, sir. But one more question before we let you go. The direct tax collection for 2021-22 has exceeded the budget estimates. Is this due to increase in the number of taxpayers?
No, the taxpayer base has remained identical at this point in time. We are at the fag end of the year, and till today, 6.11 crore of tax returns have been received, because the return filing date has been staggered. We'll be receiving more returns in the coming times. By February 15th, we'll be having the auditable cases returns filing. So we'll have a better idea. By March 15th, right? By March 15th, we'll have a better idea as to how many would have filed their income tax returns. But my estimation is that it will be as good or very near to the last year or the year before last numbers. The numbers don't really matter when it comes to the tax collection, because the profile of the taxpayers in India for the last so many years is that at the bottom rung of 0 to 10 lakh, we have 92% of the taxpayers are at the lowest rung. And beyond 10 lakhs to 50 lakhs, we have not more than 45 lakh of people who are between 10 lakhs and 50 lakhs, which is roughly 6.7 or 7%. And from 50 lakhs to 5 crores, the number of returns is around 4 lakh or 4.5 lakhs, which is around 0.7% of the total universe. And at the top, more than 5 crores, we are only having 31,000 return filers. And out of the 31,000, 17,000 or more than 17,000, nearly 18,000, they are corporates. So we have a peculiar tax profile of our taxpayers. So the numbers here don't matter to us. What matters is people or the taxpayers moving from the lower gradient of that tax profile to a higher gradient, right? As economy picks up steam and people get more income in their hands, more disposable income, etc., right? They will keep climbing the gradient, and we'll have a larger middle level between 50 lakhs and 5 crores kind of, that number holds the key as to the success of the tax mop-up exercise, the revenue generation exercise of the government. From 50 lakhs to 5 crores, how many we would have let migrate from the lower gradient to that gradient. So it holds the key. More than 5 crores, more the merrier. More would come. But 50 lakhs to 5 crores is a very significant segment. And we are watching that number very closely.
All right, Mr. Mohapatra, thank you very much for joining us here on Urban Debate on Mirror Now this evening and helping us understand the new crypto tax that's going to be in place from next financial year. Thank you for joining us.
Thank you.